So essentially what they're doing right now is to jumpstart the economy by cutting the interest rates or to stabilize it because there's essentially a trade war going on with China. Hello everybody, this is Ronan Blue, just taking my daily walk here today. And today's topic would be on would your house be a better investment or would the stock market be a better investment? But you'll find that in the majority of the cases that banks tend to push housing other than the stock market. And their argument is basically that having a house or having a mortgage would be considered as a good debt. But yeah, I mean, in some ways it could be considered as good debt. But from my perspective, debt, whether it's good or bad, is still debt, and you still have to reduce it. But from the perspective of a house, good debt would be that if you do pay off that mortgage, specifically the principal, then it's somewhat like saving. And over the years, you'll be saving forcibly into a mortgage until it's completely paid off and you're debt free. I do agree that paying off your mortgage would be a form of pretty good saving for your retirement in the future. So there's no argument there. And another point in having a home would be that it should technically go up in price over the years. So that's another good point in having a home as well. So you can say that investing into a mortgage on a monthly basis is somewhat similar to investing right into a retirement fund as well. But the best strategy would be to stay in the home that you do purchase. Now, if you jump from one location to the next and selling and buying your home, it probably wouldn't help you in the longer term. So sticking with those 15-year or 30-year mortgages would be a pretty good strategy for you if you were to stay in the original house that you purchased. Check out my 14 best ways to quickly pay off your mortgage. I actually got a pretty good response from a lot of people who viewed it. So there are actually 14 ways that we have used over the years to pay off our mortgage in 10 years actually. So, I mean, there are some who can actually pay off their mortgage a lot sooner than that. But the problem of having to put everything into paying off your home is that, yes, you might become that millionaire homeowner, but you'll become house rich and cash poor. So all of your assets would be trapped right into your home there. And the only way to really tap into it is to maybe have, maybe to sell it or to apply for one of those reverse mortgages. Which I don't advise you to do. It's actually, what's the point of getting back into debt again? From my perspective, it's actually works against you, I would say. But one huge advantage of having a home that's completely paid off is that you don't have those mortgage payments anymore. So, and you won't have to worry about maybe renting an apartment anymore. But you also want to make note that in order for your house to be worthwhile in growing wealth would be that you need to have a growth of about 8% each year for a 15-year period for it to overall be worth having to have a home that's paid off. So obviously you got to pick a home that's in the right location, or you know, you might want to even potentially rent out that property in the future as well. A lot of people do that. They just get like a property manager and who manages the home for you, and they find the tenants for you, handle the maintenance for you while you go abroad and do your thing over there. Investing into the stock market side of things. So historically, if you look at the data, let's say in the last 15-year period, you can see overall that the stock market has outperformed the housing market by far. So from that perspective, you can see that the gains for having to invest into the stock market would be much more worth your while than investing into housing. But not only in the last 15-year period, but if you were to pull it all the way back to the 1900s, you'll see in comparison that the stock market has had much larger gains than anything in the housing market. But on the other hand, in the last 15-year period that we have been investing in, we actually experienced three major declines in the stock market. The Lehman shock there in 2008, a little bit of Brexit as well, and there was one more that we experienced, but what was significant about those drops were they were close to 30% drops, but in each and every one of those cases, the government has always bailed out or artificially kind of propped up the economy. So essentially what the US Federal Reserve normally does is they increase or decrease the interest rates to either heat up or slow down the economy. So right now, in the previous year, they were actually increasing the interest rates because they felt the economy was too hot. But now with the trade wars and other factors going on, they've actually began to cut the interest rates. So with these adjustments, dependent on whether you have housing as an investment or stock market as an investment, it really makes a huge difference to educate yourself of the global economy and to also pay attention to what the Federal US Reserve would do to stimulate the economy. So essentially what they're doing right now is to jumpstart the economy by cutting the interest rates or to stabilize it, because there's essentially a trade war going on with China, and by cutting the interest rates, it might actually calm the markets. It'd be great for both the housing market as well as the stock market, because it means that people could borrow money for lower rates. So that's why it starts an artificial bubble. So it's been like this for years, for decades. So whether you choose the housing market as a way to invest versus the stock market, it's really up to you. And we actually like diversification, having both, because you never know. It's kind of like if one asset goes up, then another asset goes down, and vice versa. So we kind of like diversification from that perspective. But the key to investing would be to definitely have no debt, and to save as much as you can, and to invest and to reinvest, and just to grow your wealth overall. And for us, we live a very minimalistic lifestyle, so all of those in combination, you'll probably have a very secure retirement, even an early retirement if you wanted to, and factoring in the savings rate as well. Our savings rate is actually a good 50% back in the day when we were working, but now that we are financially independent, we have a savings rate of 80%, which is fantastic for us, and it will allow us to go overseas in comfort to experience the different cultures that are over there as well. But of course, whatever investment vehicle that you do choose, it really depends on your lifestyle. So if you want to invest heavily into the housing market, it's most likely the case that you have a family. So that's a good decision from that perspective. And for those who maybe don't have a family and are single, you may want to look at investing more heavily into the stock market. So it's case by case, really. But since we do like diversification, I can tell you that we do have a paid off property, and we do invest heavily into the stock market. But when comparing the two, the returns for the stock market has been a lot higher. In most cases, they don't teach you that in school. Like in school, they teach you to get a house, and they don't teach you to get a brokerage account and start investing into the stock market. And it's too bad, because our educational system should teach us more about personal finance. But if you have a really good balanced portfolio with index funds and mutual funds and dividend-paying stocks and REITs and bonds, with all of that mixed up together in industries that are stable. And of course, you always want to keep an eye out on your portfolio as well. 401ks, as well as a Roth IRA to take advantage of those tax implications. And overall, just see a growth mindset in having to set goals, like setting a goal to hit your first $10,000 or your first $100,000. But then one really great thing about having a paid off home is that you don't have to think much anymore. Now, one of our investment properties there, we have a property manager who handles everything for us. So they get the tenants in for us, and they handle the maintenance, and they do other detailing as well. And it's great to have around. So there's a lot less to do, I would say, with a payoff home than a stock portfolio that you have to maintain on a monthly basis, sometimes maybe a daily basis. And you always have to maintain it, and you have to think about rebalancing it as well. So it's a lot more work for you to do, but the returns are a lot higher. But although it is a lot more work to take care of your stock portfolio, it does pay off in greater dividends than having a home. But it's always nice to have a roof over your head as well. Well, I think I end my vlog here today. Tell me what you think of investing into housing or the stock market in the comment section below, and just tell me which you would choose. If you like this vlog, please don't forget to give me a like, subscribe if you haven't already, and hit that notification bell for more of my coming content here. Thank you for watching my vlog. Be free, gain wealth, and travel far.